Welcome to this week's market drama. We'll begin with the S&P 500, which was up 0.6% for the week. It is now up 20.3% for the year. NASDAQ was up even more, up 1% for the week. It is now up 20.7% for the year. S&P 500 hit new record highs. So what's driving this? Well, we had a number of economic data points that continue to give confidence to the markets that we are in an environment in which the Federal Reserve is cutting interest rates, inflation is coming back to where it should be, and the economy is still in strong footing, right? So all of that gives a pretty good environment for the stock market. So when it comes to data point, we have personal consumption expenditures index, the PCE index, which measures inflation. And it showed that in August, the year-over-year rate was 2.2, slightly below economic consensus, so meaning better than expected. And when you exclude energy and food prices, core PCE was 2.7%, which was what was expected, right? So again, those type of data points on inflation reassure the market that inflation is back kind of within range, if you will. Then we also had second quarter GDP numbers here in the US revised, and it showed that the economy expanded at 3% annual rate, which was slightly better than expected. And look, an economy growing at 3% with inflation below 3%, and with the job, if you look at an unemployment rate below 5%, like those are pretty good numbers, right? So from that perspective, the markets look at that and are liking that. And you could tell that the market is kind of tilting towards, the economy is actually doing fairly well, is that the sectors that have done really well in the last couple of days, weeks, are sectors like consumer discretionary that are leading the way. Those are sectors that tend to do well when borrowing costs comes down and the economy is doing well, right? Lower borrowing costs gives new sources of credit for consumers. So that kind of reinforces that. And then on top of that, we have mainline Chinese stocks surge this past week after their central bank approved some measures to accelerate their economic growth. This fares well not only for Chinese stocks, but really for the global economy, right? You got to remember that China is the second largest economy. So all of those things really help the broader market perform well. Next week, we have payrolls data, which are really critical. We also have ISM data and PMI data. So we'll see what we get next week. Stay tuned. Take care.